Welcome to our webinar. Today we have the pleasure to present another webinar in partnership with Moss Adams and Bakertilly. So today's webinar is going to be about the fleet tech stack transformation, turning accounting systems and the TMS transitions into competitive advantage. My name is Carolina Wagner. I'm the head of marketing for BeyondTrucks, and we're going to have this webinar getting presented by BeyondTrucks and Moss Adams Bakertilly. So let's start today with introducing our dear presenters to the webinar. So today we have with us Hans Galland. Hans is the CEO and co-founder of BeyondTrucks. BeyondTrucks is a modern TMS, specially designed for fleets with complex operations. So it's AI ready AI, and it's a cloud system, transportation management system. And we have also here Chris Millet, Director of NetSuite Solutions and Client Success Leader for Moss Adams and Bakertilly. So Moss Adams Bakertilly is leading advisory firm in data and also tech strategies for customers. So with that said, let's get on the topics that we have today to address the oral webinar theme. So starting off with what is changing. So Hans, why don't you start giving us kind of an overview about what is changing in the accounting and also the TMS landscape?
Thanks, Carolina. Good afternoon, everyone. Very glad to be here. I think I can start maybe with a comment that I hear time and again from customers. And our customers are large enterprise fleets who turn to us to simplify their processes, but also make better decisions. And customers often come to us and say, I don't want to manage more IT vendors. I have all these IT vendors, and now I need to deal with them. And they're struggling with it. I think they're fundamentally struggling with it, which means there is a new problem out there that they're not used to dealing with. And it takes me to a fundamental change that's happened over the last, I would say, probably across industry, 20 years, but in the transportation sector is only being manifesting itself over the last, I would say, 2 years. And that's the move to the cloud. Maybe you can go to the next slide briefly. And so what's traditionally been happening in the transportation management system space is that most platforms, TMS or also accounting platforms, were initially built for on-premise deployment. So one software license, one software instance per server that was hosted on-premise. Over the last few years, some of the big players in the TMS space have started to move those software licenses, those software instances to the cloud. Now, most big enterprise systems today will say they have a cloud version. However, that is still very, very different from where the world has moved to otherwise in modern software design. And that's was initially started only in the consumer space, but then has really trickled down to the enterprise software space, the B2B space, and it's the move to what is known as the multi-tenant cloud, which essentially means that multiple enterprise users or enterprise customers share a common code base while their data is still segregated into separate data silos that are independently encrypted and independently held. So that new architecture essentially uses one software instance for multiple companies across multiple databases. And most modern systems that are out there today, like Fleetio or the modern ELDs or BeyondTrucks, are architected as multi-tenant cloud systems. Can we go to the next slide, please? That is really important because what it has done, it has made integrations much easier. So when you look at the left side of the slide, while in these traditional single instance software architectures, whether they're in the cloud or on premise, every integration between two systems had to be built individually. So system, let's say a TMS system integrating an ELD system, or TMS system integrating into a ERP system. For every company, you had to build this individual integration. It's very labor intensive, it's very expensive, and it's also hard to maintain. However, with multi-tenant architectures, it becomes much easier to integrate across two systems because the code is the shared code on both sides. So essentially, you can integrate at the systems level, build that integration once, and streamline the process of connecting two systems with each other. Sometimes there's still, some work involved in mapping data fields, so it is not always as simple as you can just connect the two systems and they start speaking to each other, but it has radically reduced the effort it takes to connect two systems. And that in itself has opened the path to a new architecture across the entire tech stack, and we can go to the next slide. So while systems in the past were these monolithic architectures that built different functionalities that talk to itself, today what you see is a tech stack that is built not out of one system provider, but out of many different system providers that start talking to each other through API integrations that connect these two or multiple multi-tenant systems very, very efficiently. And very frequently at the core of those integrations, whether it's into an ELD, into a fleet management system, or a safety management suite, stand two systems, the TMS on the one hand for operational workflows, and then for accounting, financial transactions, financial records, the accounting system or the ERP. Most data gets aggregated in a data warehouse nowadays, but it is not one single system that runs everything. So that trend has really, really started to sink in the transportation space. I think the first sign of it is that people complain, that experts start complaining about all the integrations to manage and all the vendors to manage. But part of that problem is that there's still an old software that is architected in a way that every integration has to be custom built into the old software architecture. If they were in a modern architecture, that would be much less effort and much more cost efficient for them. So that takes us back to the very first slide and the very first bullet. And the biggest change that I have seen is exactly that architectural change. And I'd love to hear Chris's perspective on that, on what he's seen.
Yeah, thank you, Hans. And I think you hit a lot of the main points around that and what we see here in our work with our clients and doing a lot of the advisory work around, technology strategy and roadmaps and data strategy. And, if we really talk about the cloud and the multi-tenant situation, and again in my intro, I specifically work with NetSuite, which was originally NetLedger, which was created in 1998 and was the original cloud-based accounting system out there, and has just expanded upon that to be more of a full-fledged ERP. And that's what really people are going towards. And what that kind of multi-tenant, cloud-based architecture allows you to do from an accounting system perspective, TMS perspective, or just a holistic technology stack perspective is really allow you beyond just the ability to integrate easier. It's really hardware agnostic, it's browser agnostic, it's device agnostic. I don't care whether you're using a laptop or a phone or a watch or a tablet. As long as you have a connection to the internet, you have access to your information, right? And this is really what this is about, right? It's really about the ability for you to be able to aggregate, consolidate, and easily consume your information. And what is information? Information is data. So Hans alluded to this in one of the slides around data warehousing and being able to have interconnected systems. And that's where the landscape is going towards for just business systems in general, right? So whether we're talking about accounting, TMS, a warehouse management system, you name it. The key is to have all of our data be able to interact, so we're ultimately having a single source of truth, and that we can, what I like to call, democratize our information throughout the organization, right? We're not in these silos. We're not in these compartmentalized groups to where, hey, if I need a piece of information from my fleet manager, I don't have to ask them specifically for a piece of information. I can already see it as long as I've been granted access to that information in my system. It's in real time, and things that affect my job, say on the accounting side, let's just say I have some invoices to send out to customers based on some activities that happen within my fleet. I'm going to be able to see that in real time based on that activity. So the inputs that those users are giving on that side of the business are automatically going to be known to me, and give me guidance on what I need to do on my side, on the accounting side of things, right? And so that's really what we're talking about there, is being able to have a seamless, integrated, automated system. We'll talk about some of the other technologies a little bit later in the presentation when we talk about AI and some of your other data strategies around some of that information. We note on things around AI readiness as well. And really what we're talking about is making it easier for me to consume the information that's presented to me so I can make decisions faster. So
I think to that point, I find it fascinating. And before this call, I literally got off a conversation with the COO of a mid-sized animal feed distributor based out of rural Ohio. And their team today has a 15 people data science team.
yes.
It is, you would think that an agricultural manufacturer distributor, in rural Ohio is not it there. But I think we have seen even the most traditional businesses today start moving to architectures and a level of sophistication that is mind-boggling now. But we also have the other side of that coin, where we sometimes have customers who are still on printing things on green bars and using paper forms and working on black and green screens. So I think the world is still somewhat bifurcated or polarized in terms of the choices that people make. But it's mind-boggling.
Well, your point is well taken. And again, we have an entire team here in our firm that's all that they do, is work with people on what does that data strategy need to look like? Where are you coming from? What is your internal ability to consume the data and be able to understand what it's telling you, right? And that's really kind of around data strategy and things like data governance, and being able to put solid strategies in place that are going to not just be kind of pie in the sky, piece of information. Oh, that's nice, but is it any more than anecdotal, right? We need to be able to actually present the information in a way that is meaningful at whatever level of sophistication your organization has, right? So you may have, like you're describing, 15 data analysts, and that's their world. That's where they live. But you're going to have just as many, or if not more, organizations that really don't even know where to start. And that's really where we help a lot of our clients, is identifying what that roadmap needs to look like. So,
and it's so important, time and again. I think when we see people on old technology, people are scared to make a transition. And is it a painful transition? It is a painful transition, but it is probably the most transformational journey some of these companies can go through. And sometimes customers come to us and says, can you implement in 3 months? And it's like, you've been on this old system for 30 years. It's like, if we implement in 3 months, you would miss out on the great opportunity to do a down to the studs renovation and make sure that your foundation is sound and you're not just repainting your walls. So it was really, really, I think there's so much value and opportunity in these changes that people often ignore. I think I'm more scared about the transition than anything.
For sure.
Absolutely. And I guess this actually brings us to like moving forward into the presentation. So
Right.
the code in the warning signs, Chris,
Yeah, and
when
I think
the current
Hans,
system is
yeah.
holding you back, I mean, what do you do, right?
Yeah. So I think Hans was just talking about this, right? I mean, it's when you've been on a system for 30 years, whether it's Great Plains sunsetting or you've got multiple disparate systems and your IT team has expanded to an unmanageable level because you're just trying to manage your systems. You're just trying to manage your data. You're using a lot of workarounds outside of the system, right? You're using multiple spreadsheets and pivot tables and links to different things that continually break. And you have to hire somebody just to maintain the links in your data, right? And then of course that's fraught with errors, it's fraught with multiplication of effort. Just simple things like fat fingering something into the wrong field on a data spreadsheet that's going to skew your entire model. Those are all the things that we see constantly. These are the fears that people have. But yeah, you hit it on the head with kind of that tribal knowledge that comes from using an old system and the fear from moving forward into something that's a bit more modern. And those are things that we work with folks a lot on is the strategy around that, and just the change management is what one of the biggest things is around when you're going from a legacy system into a new system. But anytime, if we're really talking about the warning signs, anytime that you are just a simple thing, I'll just take it from a simple accounting perspective. If it takes you more than a handful of days to do a month-end close, you need to consider looking at a new system, right?
Mm.
And that's just a basic one, right? I mean, we're not even talking about making concrete, meaningful, move the needle decisions about the business. We're just trying to get a basic financial statement, right? So, that would be a major warning sign. If it takes you more than a few days to close your business, let's just say you have multiple companies that you're running on multiple systems, but they need to all consolidate into one aggregated financial, right? And it takes you weeks to be able to consolidate and make sure you reconcile that information. Your system should be able to do that for you, right? That should all be automated. You should not have to spend any time doing that at all, right? And so those are some of the warning signs that you can look for that should just be apparent day in and day out, month in and month out, and are just very basic. But going into some of the other things that we talk about here around, are you not necessarily even using your systems to actually understand your data? Are you using all these workarounds? Are you using multiple spreadsheets? If you're doing all of that, you shouldn't be. Right? These modern systems should be able to do all of that work for you through automation, through some of the other machine learning and AI functionality that a lot of the systems have in place. Really, again, we should not be having to manage the data. We should just be able to consume it and make the decisions from it. So, Hans, be interested to hear your thoughts on that as well.
Yeah, one of the things we see in large fleets frequently is the size of the fleet. So the kind of the productive, or in a for hire fleet, the revenue generating staff in relation to how many back office people are on the team. And this is a ratio, and kind of an experience-based ratio, that once you have more than one back office employee per 5 drivers, you probably will have opportunities to streamline in your fleet. So I have seen fleets with two back office employees per driver, which is mind-boggling. And I think today the industry average is 1 to 4 in a large fleet. But we have many of the customers who are using BeyondTrucks actually on 1 to 5, so very efficient in their back office. And I think that ratio can be a good guiding post on seeing whether there are opportunities or not. The other thing that we've seen is on this topic of tribal knowledge is kind of interesting. I think modern AI offers a lot of opportunities to extract tribal knowledge through some of the machine learning opportunities and learn not only kind of not replacing the human, but learn from the human in the operations and codify some of that experience and wisdom and tribal knowledge and then built it back into new operating processes. So there's actually some really great tools that can help that transition if an employee, a tenured employee, is about to retire and everyone worries about that retirement process. So there's some really great tools that we've started to use in the dispatch space that can be very, very valuable.
Sure. And I would echo kind of your comments around that kind of back office employee to driver ratio as well. I mean, again, just from a holistic technology stack perspective, I mean, you could apply that same logic to a lot of other departments as well. I mean, just think about the interaction between your procurement group and your accounts payable group, right? Again, that should be a seamless communication between those two groups. You shouldn't have to have extra folks in a back office role to make sure that things reconcile between those two groups, right? It should be a connected system to where, especially if you're trying to maintain things around separation of duties, which is always a huge thing when you have, multiple departments working in the same system, you have folks coming in and being able to do their jobs in a seamless way and not be hampered because they just don't have access to the information. Therefore, we have to hire somebody in the back office to consolidate the information to present it to the next decision maker, right? So.
And I think the other topic that you brought up is multiple entities. We see acquisitions or having multiple entities, oftentimes one of those breakpoints where people switch out of a legacy system into a new transportation management system. And I think it came with this idea that previously having one system that handles accounting and TMS, two in one, was really appealing for companies that were built in the 80s, 90s, maybe the early 2000s.
Sure.
But with consolidation in the industry becoming more and more common, M&A is becoming more and more common, that large players buy other smaller players, then suddenly the complexity of handling multiple entities becoming such that having 5 versions of that accounting and TMS system just doesn't make any sense anymore.
No.
And that is becoming a really an important kind of warning sign or a trigger for people to move on. We've seen that time and again.
Absolutely.
I would agree.
And moving forward, and again, related to when your system is holding you back. Chris, can you elaborate a little bit more about legacy systems structure, lack of integrations, and limited AI capabilities?
Yeah, and I think that this just echoes a lot of what we've been talking about up to this point, right? Your legacy system structure, as Hans called out in some of the previous slides, is going to be very much siloed, right? So you're going to have certain pieces of your system that only do certain things and they don't really communicate without a very customized integration between these different systems. You just pointed out again, the situation we see this happen quite frequently is when you're combining multiple organizations under one roof, and they're all coming to this perspective from a different system, right? And if you're using these systems that are 30 years old, it's going to be an almost impossibility to connect those systems in a meaningful way, right? At least it's not going to be fiscally responsible to do it anyway, right? So that's, from a legacy system structure, that's what we're normally going to see, is going to see very siloed systems that do very specific things, right? That have really a limited or almost no capability to communicate with any new systems or even amongst themselves. So that leads right into the second bullet point here, is the lack of integration capabilities. So again, with what we see works greatest, especially from an ERP perspective, is what we would refer to as an open API infrastructure, right? So what that really means for a modern system is API is that application interface capability. So what we would recommend is that your core systems have the ability to connect with anything, right? As long as that system can be connected to. And that's the main question I always ask to clients or prospective clients that I'm talking to is, okay, you're telling me you're using XYZ system for whatever process, right? And they always ask me, well, can that be integrated to NetSuite? And I say, well, yes, as long as that system can be integrated to. But when we go back to the previous bullet, and they're using some of these legacy system structures, they just don't make it a possibility. So the problem is not on our end, right? The problem is on the legacy system end, right? And then, the last bullet here is around limited AI capabilities. That is the major buzzword these days, is what does AI actually even mean to people? But really, again, the greatest strength that we're seeing in modern systems from an AI standpoint is, again, the ability to present meaningful information to me faster. Right. So we're leveraging AI to consume the data in a faster way, not to make the decisions, but to maybe make recommendations around what the data is telling us, so that maybe the AI will be able to call out something that we didn't initially see, right? Maybe a trend, maybe a forecast that maybe go against what we initially thought about was happening with our business, right? Again, if you're not experiencing that with your current systems, then again, that is a warning sign, right? Because that's something that's available to you and you should be leveraging, especially if you're looking to scale and grow towards the future. So, Hans, what are your additional thoughts there?
Yeah, I think what we've seen, on your point on what is fiscally responsible, we've seen actually a lot of opportunity in looking at the tech stack, for our customers looking at the tech stack more holistically, and moving away from the traditional conception of, okay, this is what a TMS does, or this is what an ERP does, but actually assess what is the most cost-efficient way to assemble a couple of these capabilities. So one of the things that we see is that in fleets, frequently anything that happens from the moment a load gets assigned to a driver till the data comes back into the system for payroll calculations or bill calculations, that kind of the middle piece, which we call delivery execution, is literally the driver delivering the commodities to the customers. Any data that gets collected in that piece traditionally has been collected with multiple bolt-on solutions. There may be one for driver workflows, there may be one for imaging, there's one for image indexing, there's one for invoice generation. And in that space, in the old architecture, that was all kind of built into that on-premise system. But in today's semi-cloud, semi-on-premise world, these integrations become super, super onerous. So often when we look at the spending that our customers make on these workflow pieces in the delivery segment, that could make up 1/3 or half of a modern transportation management system's annual fee. So, and again, not only is it the systems that you need, or the bolt-on solutions you need to buy, but it's the integration service provider who needs to stitch them all together, because they're architected in a way that is just not modern. And so I think there is, because people have stayed on legacy system for a long time, there is this almost cancerous growth on top of them of additional things. And unfortunately, I call it a little cottage industry of integration service provider who make money off the failures of the old systems to function in a modern way. Right. It actually perpetuates the problem. And critical thinking is really important on the customer side. That's what we found, and having advisors like yourself, punch holes into established operating practices, super, super critical.
I would agree. I mean, we're always going to approach things from a leading practice perspective and make you tell us why that won't work for you. Right. If we have hundreds of people that doing this, that do what you do, right, then why won't it work for you, right? And then the other piece of this is also, as you touched on, just what is the pain, level of pain of not doing something about this causing, right? So whether that be financial pain, the fact that I can't make decisions as quickly as I need to make them, which can lead to financial pain. And that's really what drives ultimately a lot of people to automating and connecting, in a more modern way, right? Is the pain becomes greater than maybe the initial investment that they look at, because that's what a lot of people see. They say, okay, yeah, it's going to cost me X amount to make this transition, but they're not looking beyond. That's why, the critical thinking portion that you brought up is super important, because, that's something we work with our clients a lot on, is should be your return on investment from this, right? And what is that time frame? What's the break even point? Right, with making the investment in your technology, right? And those are all questions that should be answered before you even go down the path of making that decision, right? So,
yeah, I think that these ROI calculations is a really interesting one, and I'm curious to have your thoughts on that too, Chris. I think on the AI front, that's particularly tricky. I think there's a lot of promises and hype that typically comes today with a lot of the AI applications, but I think at least on our end, what we see often is once they get implemented, and you realize that the data is not available or they can't be properly built into a workflow, the ROI gets eroded. We have instances where people buy AI bolt-on solutions where the integration cost essentially just kind of eliminates any type of ROI because their main system of record is not multi-tenant a multi-tenant system. So curious what you see on kind of the ability to generate
when
ROI.
we're working with ROI, we're trying to justify a recommendation, right? Really is what it comes down to. Is if we're trying to get people out of the old way of thinking, and hey, this, the level of effort that we're talking about here is too great, right? It's too much for me to take on. The change management's going to be too much. But as you start going through, and that's something that we'll touch on the next slide, is kind of how we go through the phases of helping people through this process, is really about that current state assessment, as we see here, and defining what those business process requirements are. And as you start going through that, and as you start actually showing the users, okay, so right now you're handling this process in this way, and it has this many steps, and this many people are involved, and it takes this much time, right? It's very easy to calculate an ROI when we say, okay, we're going to automate that entire process from A to Z, right? And so not only do you not, going back to kind of the back office ratio that we're talking about before, not only are you not going to have 5 people doing this, you might not even have to have 1 person doing this process anymore, right? And those things, we see that all the time as we're just going through just a basic demonstration of some of the automation tools that are available. Let's just see the light bulb start going on, right? Saying, oh, wait, you mean I don't have to spend 20 hours a week reconciling this piece of data with that piece of data anymore, right? And I think it's pretty easy to start defining the ROI at that point, because now, and we're not necessarily looking to take people's jobs away. What we're really trying to do is allow people to make a more meaningful contribution to the organization, right? Why have people that are really smart people just do busy work all the time, right? Why not allow them to innovate and come up with new ideas? And, you never know where a great idea is going to come from, right? I have a lot of people that work on my personal team here at Bakertilly Moss Adams, and I tell them all the time, I'm not going to be the one with all the good ideas, so I'm relying on them to come up with them, but I can't saddle them with a bunch of busy work, or that's all they're going to be concerned about, right? Is that so? In order for me to enable and harness the knowledge that I have on my team, I have to make their lives easier, and part of that is going to be, this moving into getting into more modern systems. And that's really, if we talk about the step-by-step approach here to really looking at making a decision around what direction we go, you really have to do that current state assessment, understanding where you're coming from, what the limitations are. And I always frame this in a question when I first start having a conversation with someone about their systems, is in a perfect world, what would this look like to you? Right. Mm-hmm. If you could make all the choices and there was no financial limitations and no resource limitations, what would this look like? And so and when I'm asking that question, I'm just trying to get a perspective, right? Well, it'd be really great if we could, do our month end close by the start of the next month. Okay, well, I know where they're coming from then, and I know that we can do a lot better than that, right? So that's why you want to always do that current state assessment. And then, obviously you move into those requirements definitions. And, Hans, I'm sure you guys have a very similar process when you're starting to engage with clients on a new project. So interested to hear, kind of what you're doing there, especially when you move into that current state assessment and the future requirements definitions.
Yeah, and we have different approaches depending on the horizon of the customer. More often than not, I think one of my favorite questions is if you go 10 years out, so to 2035, and you think you just lost your biggest customer to a competitor, what capabilities did your competitor have that you didn't?
Mhm.
And then in turn, what do you need to do today to develop towards those capabilities? And I think that is a very kind of future-based approach, a very pragmatic approach to have people put their economic thinking cap on and say, hey, our competitor was 15 or 20 or 30% more cost efficient because XYZ. And they could do that because ABC. So for us to get into that direction, we need to take these steps. So it is a visioning exercise, but it's very, very pragmatic. And we have seen that work if we have future focused customers really, really well in backing into a new systems architecture and a new tech stack. And the capabilities, not only that they want to have with technology, but the capabilities that they need to build as an organization and in their teams and who to hire and how to hire. So it's a very holistic approach that we see work with customers who are very future focused, but it could also be simply a zero-based approach of similar to what you just described, Chris, is like if you didn't have any technology today, how would you build your tech stack? What
Right.
capabilities do you want to have today?
Right.
So it depends a little bit on the customer, but we find both approaches valuable. I think the most important thing is zero-based. You don't want to just build on top of a dysfunctional
Right.
system
Correct.
that already fails you, and you're just putting band-aids on top of it. Because with AI at the horizon, I think it is existential that people do complete bigger renovation projects than just putting lipstick on a pig.
Right. And that's why we will very often, before we even start talking about a technological tool or set of tools, we'll just go through a business process assessment, right?
Exactly.
Here's what has to happen. Here's how you maintain your competitive advantage against your competitors. What absolutely is a must-have in your systems, right?
Yeah.
There's always going to be a handful of nice to haves, we can help prioritize what that looks like, but what are the absolute must-haves? And then even kind of going back to your comment around kind of that zero basis, we always also like to leverage what they really like about their current systems, right?
Yeah.
What are things that, you actually do like, right? Because we're not necessarily going to stay with that, but at least we can do something that's relatively similar, right? But it's also going to allow you a lot more capability. But again, it's all about what's causing you pain versus what is your definition of success, right? So when we start going through this, and what really leads us into helping folks with that vendor identification, right? Identifying the capabilities based on what's causing you pain today, how you define success, right? And what are the tools that are going to allow you to achieve those things, right? And so that's one thing that we do quite frequently is work with clients on that system selection process, right? Or tools essentially is walk through that path with them and say, okay, again, we got to assess your current state, define those requirements, and then who are going to be the best suitors for achieving whatever that definition of success looks like. So that's how we go about it.
Yeah, I think the in that vendor identification process, one of the things that we also found interesting is that I think there are business model differences between traditional software and modern software that prohibit some of the older vendors to change, or they make them very, very reluctant to actually change because it's so costly for them to move away into a new architecture. And one of the things that we sometimes, as a newer vendor, encourage our potential new customers to do is that, when you work with an accounting system or a TMS system, which are mission critical for your business, and if you want to take into consideration newer players, you may need more than a 2 or 3 months just kind of competitive bidding process. You actually do want to get to know these different players a little deeper. It's easy to choose between an Oracle and SAP because we all know they're trustworthy organizations. But
right.
In some segments of the market, the old systems may not have the wherewithal of an Oracle or an SAP to innovate and improve and change, and they may actually be no longer around in 10 or 15 years if they don't make very, very deep changes to their organization. So considering new players and building an organizational process to embrace new players is actually not that easy, especially if it's mission critical systems where so often we hear is like no one has ever been fired for using IBM. I think that's what people always say, and
right.
that may not get you to where you need to be in a
Sure.
future context. And so that's one of the interesting parts.
Yeah. So exactly, on this context, Chris, starting with you, to find the right suitable systems or tools. What are the features that matters in a modern accounting system, and then Hans with you in a modern TMS?
Yeah, and it's a lot of stuff that we've been talking about. I would say first and foremost is interconnectivity, right? And again, I will say this, I sound like a broken record, but all of this is about data, right? So you have to be able to aggregate, consolidate, and consume your data quickly in a meaningful way. When we're talking about the transportation logistics industry, obviously, it would be very helpful to have a fleet-centric GL so we can process our AP and AR in the most meaningful way possible. That's one thing we work with clients a lot on and this is an opportunity when you're going from a legacy system to a new system, is the restructuring of your GL, right? Is there an opportunity there? Again, kind of breaking it down to the foundation, as we talked about before, and really saying, hey, is there a leading practice GL that we want to implement moving forward? How do we map our old accounts to our new accounts? How do we do that data migration in the right way? Right. But I think that's definitely going to be a must have. And this is going to be true of any kind of industry centric implementation of an accounting system or ERP, is having a GL that's structured to make sense. And not just your GL, but the other financial segmentation, right? How do we allow the user or the consumer of the information to be able to segment their financial data in a meaningful way, right? Do we have the proper segments set up? Can we go beyond kind of the standard, okay, we've got our company, we've got our expense departments, we've got our profit centers, right? Can we go beyond that? What other things from a financial analysis standpoint do we want to be able to segment out? And how easy is this for us to do that? One of the things that we see is that we don't want to do that in the general ledger. We're moving away from things that require us to create these gigantic account strings that represent all this segmentation. So then you have this general ledger that's 5,000 accounts long. No, most of our implementations are 200 to 300 accounts max, right? So we want to have a system that allows us to have a very natural chart of accounts, but be able to segment our data in other ways, right? Be able to do consolidations and the automation around that if we had multiple company situation. But that all leads to the real-time financial visibility, right? How automated can the system be that allows us to consume the data? And then we have everything tied together from inventory, procurement, payroll that translates all into the reporting. I know many times when I'm starting a conversation with folks around this subject, it's we really start at the end and work backwards. Show me your current reporting. What are you using today? And how do we get that information, right? And then what I'm going to show them is, okay, here's what it could look like for you. And let me just show you how easily it is to drill back into the basic transaction, right? So if I'm ever doing any investigation, I'm trying to understand what happened during a current given period financially. It's just a few clicks, and I can just click right through from the output of what I'm looking at, and I have a question about something. Everything's connected, so I can go right back, and it doesn't matter whether it's an inventory-based transaction, a payroll-based transaction, an AP transaction. I have the same paths that I can go down, and everything's interconnected, so that when I'm seeing something on a report that may not make sense to me at its face, I can easily drill back and say, oh, now it makes sense to me why that happened, or hey, there was a mistake here, right? This is something that I can quickly rectify and then make my reporting meaningful to me. So, Hans, what do you see in there from a TMS perspective?
Well, I think there's some really interesting analogies and some thoughts that you sparked in explaining what you see on the accounting side. So I think, other than the topics that we've mentioned, multi-tenancy, integrations, extensibility, I think one of the interesting things that we have seen is how data makes its way into the system is changing. Whereas in the past, everything was about manually recording data into a system. In an operating system like BeyondTrucks or a modern transportation management system, a lot of data is created because people actually run their business in BeyondTrucks. So it is generated as they complete operational processes. So that's a big change that we see, that of course removes manual data entry, but what's more powerful is that suddenly you run your business in a new technology that can streamline, automate, improve a lot of your processes, and can also inject or surface data to you in the course of the operations that can help you make adjustments in the moment. That's particularly valuable for like fast-paced tasks like dispatching, for instance, where you are. It's almost like I always compare it to you're in the shopping cart in your Amazon account, and you just realize you have a $600 purchase in there, and suddenly Amazon says, hey, spread this over 12 payments. So it's at that critical decision point where suddenly injecting options, injecting recommendations, or sometimes just injecting information can actually make a real difference in what decision you make. So that we see that as a big important capability, is to allow the user to run their business in a new operating system rather than just run their business in real life and then hire someone to key in data.
Yeah.
I think the second thing that you highlighted, which is actually fascinating, when you describe kind of a modern chart of accounts, how it becomes more reductive and has fewer accounts, but then still through the analytical capabilities that potentially AI gives, right? Surfacing more information, but also just an analytical database gives you that you're spending less time on categorizing information ahead of time, but leverage natural language processing, for instance, for helping you categorize data or structure data that previously could only be structured through a lot of manual effort. So there's a lot of opportunities that we see in how I think the modern systems enable the operator and collect data along the way and help surface this information rather than just being a system of record.
I couldn't agree more. I mean, what we would normally see is as we are performing tasks, that's what's having the financial impact, right?
Yeah.
And so by the end of a given period, that's what allows us to be able to do a month-end close in just a handful of days, because we're not having to do these massive reconciliations around the actual process versus the data that was keyed in, right? It's actually happening as it's happening, which lends to all that real-time visibility that we've been talking about. And then something that you noted on too is leveraging newer AI technologies to be able to give insight as to where something should be categorized, right? And we see that a lot in what we call predictive analytics, right? Is, what we may have thought was happening or should be happening with our, whether it's our financial information or sales or whatever we're talking about, may not actually be appropriate, right?
Yeah.
So we're going to leverage some of the AI tools out there to give us some of that guidance and point out where we may have variances in what we had maybe forecasted around a piece of financial information and what's actually happening, and how that should affect our forecast, right? So.
Yep. Yeah, we have one great example on that. So we have a customer, they have about 400 drivers, a very specialized fleet. And I always loved their Friday routine in the accounts receivable and accounts payable department, where they essentially at 10 to noon, they went through the process of rating, which means the system would apply pay rates to the activities that were completed during the week prior. And the accounts receivable and accounts payable ladies would literally click a button and get rate. And then they went on a 3-hour lunch break because the system computationally took so long to do that. And let alone that there was probably an exception queue that had to be sent back to the dispatch team of a couple hundred items every week that then didn't make it into this pay cycle or into this billing cycle. And so what we've seen with our technology is as literally activities get completed, loads can get rated, or activities can get rated real time. Exceptions can be managed real time, and by the time it comes to the lunch break, unfortunately, the Friday lunch break has now been reduced to an hour, and the team is much more efficient.
We're not. Everybody loves a 3-hour lunch break, but
yes,
I'm sure that the business would prefer an hour, right?
Not exactly. Yeah. Wonderful. Carolina.
Wonderful. That brings us to the Q&A part of the session. So for the ones that have joined like after we have started, so you can post your questions in the chat or in the Q&A button that you have on the top of the screen. I'm also getting questions from other media or other channels here, and I'm gonna start. I mean, since I don't see any posted on the chat, I'm gonna start with one that I got from another channel. So maybe this one and I guess this goes to Chris to begin with the explanation. So what is a realistic timeline for transitioning from a system like, for example, Great Plains to another like ERP or the TMS stack? And how should we sequence the implementation? ERP first, TMS first, simultaneously? What would be your recommendation?
Yeah, so I think I think the short answer is it depends, right? So we see all forms and flavors of what happens here. I mean, it depends on the complexity of the organization. And really, as we mentioned before, where are you coming from, right? If you're a very forward-thinking technology organization, it may be a little bit easier in some respects to adopt new technology. If you're kind of stuck in the old ways of doing things, you're going to have a lot of change management, which is almost going to be as important as the technology change, right? So, I would say a realistic timeline that we would normally give our clients is in the 4 to 6 month time range of a full adoption of a new ERP system. And that's really going to start off and include with some of the things we've talked about already is really what we call a business process requirements session, right? Or a host of sessions. Regularly, our team will come on site, understand, have interviews with your key process owners. If you have a warehouse that you're managing, we want to understand what the movement of that warehouse actually looks like. Where are we going to need even hardware technology that's RF based versus RFID versus tablets versus what's going to be the ruggedness requirement of your barcode scanners, all those different types of things, right? That we're going to want to understand, and then we can base those recommendations. And then through that process, and that can take a series of weeks to go through that. And then it comes down to it really comes down to the go forward plan from there, right? And then the go forward plan requires several things. So it requires, okay, what's the recommendation from a licensing standpoint? So if you're purchasing, an Oracle-based product, right, you're going to need to make sure you're purchasing the proper modules and the proper types of licensing for your users. And that's all comes out of our business process assessment, right? Who's going to be needing access to what pieces of functionality. And then that goes into, okay, that's going to give us guidance into what actually needs to be configured in the system. What do we need to do targeted training for versus more of a holistic training? So it's going to give us guidance through the whole process. But I would say, just as a short answer, you're looking at anywhere from 4 to 6 months process, reasonably, depending upon the complexity of your organization as well as where you're coming from kind of a technology savviness standpoint. So,
Perfect. Thank you so much for that. Anything you'd like to add, Hans?
No, I would say TMS implementations, especially if the fleet is larger, would take 6 months at the very least. Sometimes can take up to 12 months, depending on the number of integrations that need to be considered. And I would confirm or double click on everything that Chris just said in terms of making sure requirements are properly documented and researched. So it's a transformation that you should embrace as a transformation that makes your business better. It's like going to a detox treatment. You don't want to cut short on the orange juice or whatever spinach juice that you're drinking, because it makes you actually better, even if you don't like the taste of it.
Absolutely. And I guess we have time for one more question. Hans, that will go to you. Can you elaborate on what AI readiness means practically for fleet operations? What specific AI capabilities should we be looking for in new systems? And how do we ensure our investment will adapt to the future technological advances?
Yeah, my recommendation would be to, first of all, don't be overly focused on the ability to build features today or offer features. It's really is considering how a system is built to facilitate exhaustive data collection, and then how that system can communicate and how fast that system can communicate data to a data warehouse or other applications. And then thirdly, if there were any AI features, how these AI features can be embedded in the actual system workflow. So it's not really about kind of the sparkles of the system, but it is really about, is this system capable of facilitating what work means in a fleet of the future or in an operation of the future, and how advanced decision making, advanced analytics can improve decisions in a process. So it is more abstract thinking. It is more architectural. It's more foundational, but it is absolutely critical for anyone to get productivity gains. My favorite example of that is the change that the textile industry went through mostly in the United Kingdom, when they cut over from coal power or steam engines to electricity. The productivity gain didn't come from a cost difference in the cost of coal versus electricity. It actually came from the restructuring of the manufacturing or the textile plants or the the shop floors, because suddenly so much space was opened up and all processes and workflows could be restructured. So the benefit of that technology change oftentimes comes through the deeper changes or adjacent changes, complementary changes that companies can make, rather than just kind of the off the surface benefit of that technology. So one of the things that I encourage everyone to think a little deeper about.
Absolutely. Thank you very much. Chris, do you like to add anything to this?
No, I think Hans hit it succinctly there. I mean, a lot of the ancillary benefits to making these technology changes might not even be self-evident right away, right? But these are the kind of things that, you know, we can certainly work with folks on and help them realize. You know, one thing that, you know, we see quite often that we work with folks on is you know, hey, you haven't really been able to capture your maybe your research and development costs and then what those expenses are in a proper way. So now you can't take advantage of those R&D tax credits, right? Well, all of a sudden your new system allows you to do that. And so now you can actually have that return that can maybe help pay for that new system. So anyway, that's just an anecdotal example of some things that we see there. So
absolutely. Thank you very much. So we actually have passed the top of the hour, but I guess it was a very interesting explanation and a good conversation, I guess, with everyone. Thank you very much. Thank you, Chris. Thank you, Hans, for your time, for sharing all of this knowledge with all of us. Thank you, everyone, for participating in today's session. The recording of this webinar will be available in our YouTube channel. We're going to send the links with the material and also with the recording, so you can access anytime. And again, if there are any remainder questions or doubts, or if you want to just chat and clarify about anything else, just please reach out to our speakers today and reach out to us. And we're going to be more than happy to address any concerns or any comments that you may have. Thank you very much. Have a good rest of your day and stay tuned for the next one. Thank you.
Thank you.